This is CGTN, China Global Television Network.
China has relaxed its COVID controls, making it easier to travel domestically, allowing COVID patients to quarantine at home, and tries its best to keep businesses operating. These easing of COVID policies is much welcomed, not just by the public, but also by the economy. However, with rising infections in the near term, challenges remain. So we'll talk about today what is next in China's economy. Joining us today are our guests, Jimmy Zhu, Chief Strategist of Fullerton Research. Welcome, Jimmy. Ms. Tao Wang, Head of Asia Economics and Chief China Economics, UBS Investment Bank. Welcome. And Mr. Felix Khew, Country Head, China Dusit Fudu Hotel and Resorts. Welcome to our show, ladies and gentlemen. Can I start with the lady, Ms. Wang Tao? What do you think are the key advantages that Chinese mainland has in its path to reopening?
Now, I think Omicron is probably less dangerous than other variants that's expert says, right? So when China opens, the death rate is likely to be lower than the previous variant. But in terms of the economy, I think one thing that it's the domestic demand is obviously the dominant part. So domestic consumption has been held up, and saving, there has been excess saving, involuntary saving, because people are physically restricted. And now with the easing, obviously people are going to go out and spend a bit more. So consumption will rebound quite sharply. As consumption rebound, I think a lot of the SMEs, small shops that have been closed for so long in the last couple of years, will be able to gradually reopen. That then will support employment and income, and then sustain the consumption. And that actually activities will rebound very sharply after that, from the second quarter onwards. More recently, given the developments, we published another note saying that things are happening faster and earlier than expected. So earlier easing, which is already happening or happening quite fast. We think that actually it have probably two effects. One is that it could bring earlier rebound in consumer activities and in reopening activities than we originally thought. For example, maybe starting already around Chinese New Year. And also, I think the timing of China's reopening and recovery coincides with a slowdown in the global economy. The positive thing of that is that China's rebound and reopening is not going to lead to higher energy prices and higher commodity prices. So inflationary worry is going to be less compared to when US and Europe opened up.
That's a good point. And let me move on to Jimmy. Just a follow-up as my discussion with Wang Tao just now. What is your expectation on the upcoming economic rebound as compared with maybe the second half of 2020? Do you think we're going to have a as strong rebound this time around? And also, Wang Tao did mention China's opening up would actually try to keep inflation at a more stable and reasonable range. Do you agree with that? And what would be the impact on China's full reopening on the global economy?
I expect a quick rebound because the pent-up demand is there. I mean, now the China GDP, more than 50%, 60% are from the service. So because the past 12 months and the past 6 months, the restrictions, which is really restrict a lot of, especially the shops in the in the mall, and also the small company, they find the logistic issues or they have to close. I think the confidence-wise, it will be much more improved from here, because the pent-up demand from the consumer side are very strong. On the global environment, Wang Tao just mentioned that it's also probably not so becomes not so easier at this moment. The demand is very strong, but at this moment, I think lots of especially the countries in the West, like US or Eurozone, lots of countries probably facing the recession risk. So the external demands, I think, is one of the challenges for China. I think we have to rely on the domestic side on the domestic demand to boost the economy. One is, of course, the consumption. And the second, I think it's also probably the authority will start to carry on to relax the rules, the properties sectors. I think that is also one of the very important drive to support the Chinese economy.
Oh, Jimmy, just briefly, what is your outlook for CPI? Because we talked about possible increase of prices.
One of the main reasons of the CPI in the past 2 years from the other countries like in the US and the Eurozone because of the rising energy prices, stimulus. But I think one of the key things is they are really short of the supply chain is really in a shortage condition. So I think at this moment, there's still no spike in the China CPI outlook at this moment, even probably because of the virus case increasing in the coming few months. But I don't think it will bring a very substantial changes to the China supply chain issue. So I think the CPI probably it was still hovering around 2.5 to 3% in this range.
Okay, that should be good news for Felix as a business operator, hearing that if prices are not going up that high. Do you think that hospitality industry would also not see prices shooting through the roof in the next few months? I mean, even with demand rebounding so strongly?
Because the Chinese population base is so big, so they tend to have people who wants to travel. And because of all this new policy coming out, we are quite optimistic. We see the light at the end of the tunnels. Previously, we might have some small meeting groups coming to our resorts, but because of the restrictions, so they are cancellation at the last minute. And also we cater for family leisure trips, but because the kids cannot leave their city, so we have to face all this cancellation. But coming to these situations, we see there are more inquiries coming in terms of bookings and all these things, but we don't see the price to surge so fast yet, because in our industry, we practice this revenue management. So we have to see the booking pace. And prior to this, also, we are hotel operators, so we sign new contracts. I am quite surprised that for these past 2 months, I see quite a number of inquiries coming in to manage the hotels or with building new hotels. So I think at coming to 3rd years of this restriction, I think people also seeing some new positive coming in.
All right, so Felix, in the relaxing of COVID rules, you would definitely see that as a sign, and that's something going to boost your confidence in business, right?
Yeah, correct.
May I ask you about your company's performance in the first 2 years of the pandemic, let's say the second half of 2020 and 2021? How would you compare that with your peers globally?
In the first year, 2020, because our holding company is from Bangkok, Thailand, you see, in the first year in China, we are doing quite well compared to overseas market because of the government's actions in controlling the spread. And while overseas, they are having a quite serious impact. And then coming to 2021, overseas market has started to improve a bit, although they are not better than 2019 because of our restrictions in China. So our business for last year have been affected quite a lot. People cannot travel, people are doing online meetings and so on and so forth. The kids cannot leave their cities because when we do leisure business, kids are the decision maker actually going for holidays. So a lot of our hotels has been affected a lot. Not only us, I think the whole industries, sometimes we face single digits occupancy for, maybe 1 month or 2 months down the road. We also have like hotel has to be closed because there are cases happening and all this. So I think things will change in coming months. I guess in coming Chinese New Year's, the booking will be going hard.
.360-degree profiles of industry movers and shakers, tech mavericks, and policymakers. We drill down on their success. We ask how they set strategy and how they navigate in an increasingly competitive market. Real talk, real business. Join the conversation. Biz Talk, only on CGTN.
Wang Tao, what do you think could be like measures and policies being put in place that could be further promoting business confidence, especially overseas or foreign businesses here in China? And also, I would like to get your take on the outlook of CPI.
Sure. Maybe I start with the CPI. I actually think that services price will go up as reopening happens, because the service sector, like the hotel sector and the airline sector, have suffered so much. They were in retrenchment in the last couple of years, and now demand going up. I think they're about to enjoy some, pricing power, some price increase, right? That's just natural. And also in China, food prices is on the rise. Pork cycle is on the up leg now, and it will continue to rise. However, I think given how weak property sector is, PPI has turned negative. That means the upstream prices are not so strong, and energy prices have come down and will be lower compared to this year. So that's actually good news for downstream operators like hotels, or like some of the services, and also some of these manufacturing sectors. So our inflation expectation CPI, we're actually a bit weaker. We see it at 2 to 2.5% on average. Because of the base effect, it will be higher, but later it will come down a bit. So in terms of our outlook, what else can boost confidence, and what else are the key drivers? One is about easing COVID policy. And so that's very supportive of business and consumer confidence. The second one is property easing measures. Easing measures are coming through with the help of COVID easing measures. We think consumer purchasing demand will pick up, but also for the developers, their financing are going to improve. And so construction will rebound. Our expectation is that things will stabilize in the next 2-3 months and then start to rebound from March, April onwards. So that's very important. The third one, fiscal policy will be very supportive. There has been an announcement that there's a special treasury bond issuance of 750 billion RMB. So I think those measures basically continue the government support will be very helpful. And finally, I think that a stabilization and normalization of regulations in the industry, which we expect to happen, will also help boost business confidence.
Well, what other tools do you think the PBOC has in its pockets to support economic recovery?
At the moment, so the most important tool is actually fiscal policy from a macro point of view. I think fiscal policy will continue to be supportive, spending more on infrastructure. I hope they can also support consumers and small businesses. On the monetary side, I think PBC will not likely to cut interest rate, given the fact that the Fed continues to raise rate and the exchange rate, has depreciated a little bit. But the PBC, of course, can use the on-lending facilities and triple R cut to increase liquidity. They also use window guidance.
Thank you. Let me go to Jimmy now. Jimmy, what would you say are the highlights in economic efforts, growth efforts in China during 2020 and 2021?
In the past 2 years, I think the economy was still pretty strong at this moment, actually, at that time. Compared with lots of other major economy, I think China still scored very impressive growth, the GDP rates, especially in 2020, when lots of countries are still in the negative growth, and because we control the pandemic pretty efficient at that time. So we create lots of domestic demands. Also, we export lots of products to overseas at that time to bring lots of growth to the countries. And also, I think the past 2 years, I think consumption are still pretty resilient at this moment. In general, in the past 2 years, recently we saw the consumption a bit slow. I don't think it's really because of the demand is a really slump, but I think more or less it's because of the COVID measures that restrict the people to purchase the thing. Moving forward, most of the things I pretty agree with Wang Tao that the monetary stance, the policy probably will play a small role, but I think it will be more targeted and more forceful. If the central authority probably want to give more support to the growth, probably it will consider one cut probably in the LPR 5-year tenor. I think it's still possible. But on the other side, I think provide the liquidity, especially to the SME and the real economy after the COVID cases are being calmed down. I think it's still very necessary. So I think fiscal policy really plays a very important role to continue to support the domestic economy.
Yeah, speaking of providing support for small and especially micro-sized businesses, I mean, these are the ones that have been pretty battered this year with rising infections across the country. What do you think that they really need at the moment from the financial sector?
The business loan is very important, especially for SME. If the shops be affected, the business be affected to 2 or 3 months, I think their cash flow really will face lots of problems compared to the bigger companies. So especially, I think, continue to provide the financial support and even the interest rate, a slightly lower interest rate loan to them, I think are very important to, it's a very effective measures to boost the confidence among these people. And also, I think there's at least about 70 to 80% of the people in China working for private firms, and lots of them are SMEs. So if the SMEs are running effectively, I think it's also very efficient to boost the consumers' confidence.
Felix, what would be your outlook for where your business would be going?
Because this good news came too fast, so some of our owners already mentioned to us that you should revise your budget. This is a good thing. And also from hotel operator points of view, like in China, 80% of hotel properties belongs to property developers. So when Ms. Wang talked about the easings of some of the liquidity for the property developers, so that's why I received quite a number of inquiries for building new hotels, new resorts recently. Definitely, we have to revise our budget upwards, because we see the lights.
Ms. Wang, Tao, I would like to get your comment on China's economic performance during the first 2 years of the pandemic.
I think in 2020, China was the first entering the pandemic, but also the first to get out that wave. And so that reopening from the second quarter onwards was very powerful after a very sharp drop. And then, so China was one of the very few economies and one of the only large economies that actually had registered a positive growth in 2020. So that was then. And of course, the government reacted very quickly with monetary support and fiscal support, special bonds and special treasury bonds. 2021 was also a year driven very much by export demand. Export was super strong because globally people are reopening. China's supply chain was very resilient.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
Jamie, what have you learned as a financial strategist in the past 3 years?
I think from the financial perspective and the business perspective, from the business perspective, I think it's lots of companies. I think they really learn how to efficiently arrange to start to working at home. I think that is one of the things probably in the next few months, probably more increasing people will also doing the same thing. So they learn how to use the different platform to work, different platform to communicate. Even let's say 20 people in the 20 different houses or different places, things will be still in order. I think that's why observing the Chinese company in the past 2 years. And on the financial market side, I think the good thing is the market already know what's the cycle probably will beginning with and end with. So there will be more prepared for the probably a possible shocking price move. So that will help to ease the volatilities in the next, especially in the next 6 month time.
So what is your expectation? What's going to happen with the property sector, let's say in the near term?
Well, I think there are some chances for the property sectors to recover. The first is, I think, after relax the COVID rules, the demand is, and then also the consumptions will start to pick up. The people's confidence is also going to improve. And number two is the property sectors in China has already in a very so-called the momentum is also a bit weak at this moment. So from that level to recover, I think probably it's not so difficult. I don't expect the property sectors probably will recover until like the past 10 years, but I think there's a pretty good chance that the momentum and the sales, especially from the secondary market, probably will be much better compared to the environment in the past 2 years.
All right, Felix, let me come to you now. You talked about your company planning to raise your budget for China, for the Chinese mainland market. What would be your piece of advice for, let's say, either a peer or a newcomer in the industry, or a peer that wants to come into the China market now?
You have to have a strategy to come into China because the market are in the reviving moods. So to have a new brands, coming into China is quite challenging at the moment because you have to establish your name in the market. So for new brands coming to markets, maybe you should do some research in the markets. What markets you want to go in, which market segment you want to go in. Either you are in the hotel, business hotel, you are in the resorts kind of business, what kind of target market you need to go in.
What do you think that China has learned from the pandemic hit years going forward as we laying out new policies now for the upcoming years?
Well, I think as China move forward, I think there are a few things. During the pandemic, and as there are a lot of restrictions, I think so digitization in China has happened much faster. So a lot of transformation in the economy. So remote working, remote learning, remote healthcare, e-commerce, and a lot of older people who used to be more resistant to using, apps and ordering things are now getting used to it and are more educated about it. And so I think, new businesses development, new forms, new business models are being developed. So that's an important thing. But at the same time, I think what we've learned, not necessarily China, but basically all of us have learned, is that interpersonal contact is still very important, especially for young people. I think, having to stay at home and do remote learning is very problematic for young kids, but also for young people working in the workplace, not observing their senior staff, senior colleague, what they do, and doing business and so on. It means they don't have a good opportunity of learning by doing either. So and as that's happening, I think going forward, I hope that people will appreciate that personal interactions are very important, also internationally, that can help basically bring more ideas and more understanding of each other. And so that, that for businesses, both innovation and also for, I think, multilateral and inter-country relations that also hopefully will improve.
Jimmy, I would like to get your take on the possible impact on the RMB and the renminbi assets going forward.
Yeah, already rise above 7 versus the US dollar. I think it's a very positive sign that the people really welcome that kind of the COVID relaxations. Our base case scenario that probably yuan will continue to rise versus the dollar, though the pace will be a bit slow. That's from the dollar perspective, also from the yuan perspective. But on the China side, when US and the Eurozone probably will enter into the recession, I think lots of inflows, actually, I expect probably will move into China. So that would definitely give lots of Chinese assets more support. Even China is not really exercising a very aggressive monetary measures, but I think the policy overall, including the fiscal, will be very friendly to the economy-wise. I think probably there will be a chance that the yuan will continue to gain versus dollar, and probably it will appreciate to 6.5.
That you think that CPI would remain in a relatively reasonable range and stable in the coming months. How do we deal with imported inflation pressure?
Well, there will be very different story compared with China and the US or Europe in the 2 years ago. First is we don't have a large scale of the monetary stimulus. When the US is cutting the interest rate all the way to zero and conduct a very large size of QE together with other major central banks like ECB and the Bank of England. This is not happening in China at this moment. So I think the inflation will pretty be contained at this moment. The second is I don't expect the energy prices and the commodity prices to rise, which I think probably the oil prices might even weaken further, given the current global economic conditions. Well, lots of major economy probably will fall into the recession. So when the energy prices or the commodity prices, if it starts to fall, one of the key pressure on the inflation is also eased. So all in all, I think the inflation still will be pretty well contained around 2.5 to 3%. If there's any demand suddenly picking up or the food prices rise, then it probably will push the inflation to 3%. But anything above, I don't really expect it will happen.
Felix, after the past 3 years, I know the hospitality industry has gone through ups and downs, probably most downs in the past few years. But you stayed here, so I would assume that your answer would be yes to the question that whether the China market still is attractive to your businesses. And nowadays, what do you think are the biggest attractions of the China market to you? I mean, other than the size of the market, what do you see in your customer group?
Nowadays, there are a lot of Chinese consumers who has actually been to overseas. They have been to many places. They stay in a different kind of hotel. They have seen a lot, you see. So they come back to China. They stay in China. They want something with good quality. Right now, our target customer, they are willing to pay premium price to stay in a good hotel. So it is important that we provide good content for our customer. And also we are venturing into wellness business because, after the pandemic, a lot of people has realized that, it's not about money, it's about your health, your mobility. So we are exploring into a wellness segment to cater for our guests.
Great. So even tiding out some hard times, still businesses are making positive adjustments and changes. And my final question to Jimmy Zhu, what would be your piece of advice for global investors who are betting on China now?
I think the global investment environment would be very tough at this moment because lots of countries are in the late cycle of the economy after the recovery of the pandemic. So I think the stocks prices and the probably will even down further on the global basis. So for China's side, I think the yuan relevant assets is really attractive at this moment because China is still on the very early stage of the recovery. From the history, it shows that no matter what kind of a stocks market it is in China or US in the Eurozone, usually the stocks market tend to gain a lot in the early recovery period. So I think based on the economy probably will continue to grow about 4%, but it's still much higher compared to many other economies, especially in the West countries. So I think the yuan assets will probably outperform in the next 12 months at least.
So the Chinese economy is still very attractive for global investors as well. Thank you so much, ladies and gentlemen. That was our guest of the day, Jimmy Zhu, Chief Strategist of Fullerton Research, Ms. Tao Wang, Head of Asia Economics and Chief China Economist, UBS Investment Bank, and Felix Khew, Country Head, China Dusit Fudu Hotel and Resorts. Thank you so much, ladies and gentlemen. Great discussion. Thank you. Goodbye.